Well, I think that typically when you have tariffs that have been imposed in the past by, for instance, the U.S., the dollar has tended to appreciate. And I think that, we can look back at what happened in 2018, and that's what we saw. So I think that was a very reasonable expectation. This is what economic theory would suggest, that the currency of the country that imposes the tariff would tend to appreciate. There is another side to this, and that other side was important in that particular case. The reduction in growth prospects for the U.S., a very significant reduction in our projections from 2.7% to 1.8%. That's almost a 1 percentage point reduction in growth. That's quite significant, quite persistent. That is leading international investors to also rethink about how they want their portfolios to be allocated. The uncertainty around trade policy also adding to the nervousness of the market and leading them to also want to adjust their portfolio mix. And then the final point is this is coming out of a period during which, if we think about the last 5-10 years, there's been tremendous appetite for dollar assets, not just the bond markets, but equities, enormous inflows into US equity markets, the boom in the tech sector, in the AI sector, a lot of enthusiasm about the strength of the US economy over that period. So that has supported the dollar and supported risk markets and other markets in the US. What we're seeing is a rebalancing compared to those expectations and those set of projections, a little bit away from from US-based assets, and therefore leading to a decline in the dollar, leading to a reassessment of valuations in US equity markets and bond markets. All of this is happening in I want to say, orderly fashion. I mean, of course, there's been volatility, there have been little pockets of stress, but nothing really too alarming. And so this rebalancing is, I would say, something that is very reasonable at this point.
Is it intended, do you think?
It's very hard to tell. I don't think that the policy at this point is to try to achieve a certain level of the dollar. It's more to sort of address the trading system itself.
Let us talk about China. What is happening in the tariff policy of the United States today is a result of the imbalances between the US and China when it comes to domestic demand. Do you think that as a result of these tariffs we will see a change in China whereby there is increased domestic demand, which is basically what the Chinese government had been saying for a long time, but it hadn't materialized?
I mean, it is the case that the Chinese economy needs to rebalance its demand towards domestic demand as opposed to externally driven demand. That's something that we've long identified in our reports about the Chinese economy, in our policy advice to the Chinese authorities. We've advocated for this. And we think that's one of the key planks. I mean, in terms of our recommendations for the three large economies, the US, the Euro area, and China, each of these recommendations are aimed at trying to help solve what we call domestic imbalances. So in the case of China, it's very clearly try to move demand and support domestic demand by providing safety nets, by encouraging households to consume because they may be less uncertain about the future, therefore they can engage into more domestic consumption. That will reduce the trade imbalances from the perspective of China vis-à-vis the rest of the world. The Europeans, investment in public infrastructure, boosting productivity, boosting growth, that's something that will also help rebalance their economies in the context in which they, like China, also have aging populations. Aging populations are happening quite rapidly in some cases. In the case of the US, rather than focusing on trade, think about what's happening on the fiscal side. This is an economy that's been doing very well, but on the back end, there have been pretty elevated fiscal deficits, 7% or more. Clearly, that's something that at some point needs to be reined in. If you do that, there will be more savings in the US economy, and that saving will actually be useful in terms of covering some of the deficits. And so the global economy can rebalance if each of these three blocks starts doing the right thing at home. Dealing with the domestic imbalances helps with the global imbalances.
I know our time is up, but very quick question. Do you think as a result of increasing tariff rate in the US from 3 to 25% today, there will be a structural change in the US?
I mean, there will be, if those level of tariffs are maintained, there will be many structural changes in many parts of the world. We are a very integrated global economy at this point. Supply chains are very integrated. Parts of the supply chains are also happening in the US. The consumption, R&D, a lot of steps often very skilled steps are happening in the US. A lot of that would have to be changing in very profound ways if somehow we have levels of tariffs that are preventing an efficient level of trade and economic integration.